first, we'll talk about the 5 ordinary income crypto activities. So the ordinary income activities, right, are these 5 over here. We have mining, staking, hard forks, airdrops, and receiving payments for goods and services. Those are our ordinary income activities. So for mining is just how new blocks are added to the blockchain. The way it works is that, miners use computer power in order to solve complex mathematical problems. And the reward for successfully solving these problems is new crypto tokens. The way it's taxed is the crypto tokens are taxed at the time that they are received. So when the miner receives the tokens, then they are taxed. They are taxable, sorry. So the key thing to keep in mind for mining income is determining whether it is a hobby income or business income. So the IRS has guidelines on how you can distinguish between business income and hobby income, but the main distinction is really about motive. So the question is, are you trying to generate a profit or not? Are you keeping like detailed records? Do you have like a clear intention of making a profit? So for example, if you have a mining business and you earn, let's say you solve a puzzle and you earn the reward of 1 Bitcoin. So the current value of Bitcoin is 46,000 US dollars. And that 46,000 in its entirety is considered business income. And that goes on a Schedule C. But if it was hobby income, it would be considered other income and it would go on a completely different portion of the 1040. So that's the thing to keep in mind. Right? And that's pretty much it, the main thing for mining income. Does anybody have any questions about that? I'm going to stop and give questions for each section, so plenty of time. And we can move on. Next up, we have staking. So staking is how new crypto transactions are validated on the blockchain. They're often compared to mining because they're both critical to the operations of the blockchain. And it feels similar to buying a certificate of deposit, which is otherwise known as a CD. And the way that it works, if you're not familiar with CDs, is you make an agreement with the bank to leave a certain portion of money with them. And in turn, you will start to accumulate interest on the amount of money that you've left with the bank. And that interest, of course, is taxable income. In the case of cryptocurrency, you keep your crypto staked in a pool for a specified period of time. And you can earn anywhere from 1% up to even 20% of the amount staked as a reward for keeping your crypto staked in that pool with validators. So as of now, there's no specific guidelines regarding staking. So we can assume that the same rules for mining will apply. All right, moving on to hard forks. Hard forks are just radical changes or upgrades to the blockchain protocol that will then cause the chain to be split into 2 different blockchains. So in this case, if you are holding on to some original tokens from the blockchain, then you can be granted new tokens in the new fork. So new tokens that you receive are taxable as ordinary income, whether even you might not have intended to receive them or not, but they are taxable in the form of ordinary income. And sometimes you won't even receive new tokens after a hard fork. And since you didn't receive any new tokens, you won't be taxed on it. So for example, let's say you have an investment in 1 unit of coin A. After a hard fork happens on that blockchain of coin A, you receive 1 unit of coin A plus. So, and this is a completely different coin, completely different chain. And at that point, that coin is worth $100 at the moment that you received it. So that $100 is actually taxed as ordinary income. And then airdrops. Airdrops is just a marketing method used by crypto startups. So the way it works is that new or existing tokens get transferred into your wallet for free. And generally, you agree to promote their token in exchange. So that the value of the tax is based on the value of the tokens when you receive the token. So there is actually pretty clear IRS regulations regarding this, which I will also link to in the chat. You can check that out. And a good example of that would be, let's say, a friend of yours decides that they want to start they want to start creating their own coins, and we'll say they call it coin B, and they agree. They say, hey, if you promote this coin for me, spread the word about it, then I'll give you 50 coin Bs for free. All right, cool. So, your friend airdrops you the coins and you promote it on your Twitter account, right? And then at the time you receive those coins, right? Each one is worth about $2. So you'll have $100 of ordinary income, right? That can be taxed. So that $100 that you worth of coins is taxed as ordinary income. From there, the last one, the method, is payment received for providing goods or services. So this is anything, it's all treated as ordinary income. So it's just like, normal course of business. If instead of receiving, money, US dollars currency, they receive the cryptocurrency. So there's, many different places that will receive like Dogecoin as payment. That's one of the coins on the market. And so that's actually treated, when you're just like with normal income, that's treated as ordinary income. And it's taxable at the time that you were to receive the coin, taxable at the time you receive the payment. And the value of the payment is determined at the time that you received it. So for example, let's say you have a business and I shouldn't say that, but let's just say you provide a service to a client, right? Not necessarily whether you're an employee or not, but you simply provide a service to a client and they pay you in the form of 1 unit of coin A. And coin A is valued at $500 US at the time that you received it. So that $500 will be taxed as ordinary income. And so one thing to keep in mind for this is if you are self-employed, the payment will be categorized as self-employment income and is subject to a self-employment tax. And so that pretty much covers it for ordinary income activities. Does anybody have any questions regarding that up to this point? Or is everything clear? Going once, going twice. All right. All right, so that's everything for today. And if you have any questions, please leave a comment. Thank you.